We continue to monitor meme stocks this morning after Roaring Kitty, the person who's seen as the Kickstarter of the meme stock frenzy during COVID, posted online for the first time since 2021. For more on the meme stock rally, we have two experts joining to give us their take on GameStop, AMC, and others. Welcoming in Adam Kobeissi, the Kobeissi letter editor-in-chief, and JJ Kinahan, IG North America CEO. Thank you both so much for being here. I want to start with you, JJ, because I'm curious the legs that you see to the movement that we're seeing here. How long do you anticipate this rally going on for?
Well, it's really interesting, Madison. Through our Tasty Trade brokerage, we didn't really see as much participation yesterday, to be quite honest with you. I think people were a little bit more of, okay, can this actually last? And so today we're seeing a lot more interest in both of those names. And what's interesting is it's not just on the equity side. Today we're seeing a lot more options trading also. So I would expect the options volume to continue to explode, and for a couple of different reasons. Number one, the amount of capital you have to put up, which retail traders are always aware of. Number two, because the stocks are hard to borrow, those who may not believe that this is here to stay, it's very difficult to short the stock. So in order to do that, they're paying a little extra premium, but they are buying puts in order to express that opinion. How long can this last? As they say, these things can always last longer than you think they can. There seems to be momentum behind this trade right now. And the other thing is we're in a little bit of a slow news cycle. We do have some earnings this week in CPI, but nothing that I think is going to continue to make the market crazy. So as we head into Memorial Day, weekend next week, this may last through that as people are looking for something to trade.
Adam, is this comparable to what happened in 2021, and why or why not?
It's starting to feel like it is. I think yesterday, everyone was a bit skeptical if this was going to last or not. Today, it's clearly lasting. And I mean, look, it's interesting because a lot of people were saying, we're going to have less rate cuts, maybe even more rate hikes. That the economy is far worse now than it was a year or two ago. But the reality of it is equity prices are at all-time highs. Crypto is near all-time highs. And now retail investors have more capital than probably ever before. And a lot of this money is either rotating in from the sidelines or moving in from other assets like crypto, stocks, and really anything that has had a hot run over the last year, retail was in it. And I think now the question is, how long can this last? How long can these shorts hold on? And I think a lot of the upside is being catalyzed by short covering because we've seen over 3.5 billion in short seller losses this week. And that will probably continue as long as retail can hold on here. So it's definitely getting interesting.
What are the advisors to these hedge funds telling them about GameStop? Because why did they not learn their lesson the last time? Like, just don't short GameStop. Just don't do it. And Adam, I'm sticking with you. I don't know if I said your name at the start of that.
Yeah,
Sorry.
I mean, look, I think it's very hard for anyone to tell you exactly what's going to happen on a day-to-day or hour-by-hour basis with any of these stocks. It's basically a toss-up. And I think what the hedge funds are thinking is, well, if we can nail the top, we can make a lot of money. But the problem is nailing the top is almost impossible to do with accuracy. And I think that's why it's kind of the same cycle again, but maybe the skepticism this time around got more people into that short trade. Now they're starting to cover. You're seeing these huge 100% plus moves. I mean, in the pre-market, you saw GameStop go from up 50% to up 130%, back to up 80% in the matter of 20 minutes. I think right now it's from a risk perspective, a lot of these funds are starting to say maybe we should just stay away to both directions.
JJ, how closely should the average investor be watching the moves that we're seeing in meme stocks?
Well, I think, it's interesting, but is it part of most people's portfolio? Probably not. So I think you have to be a little bit careful there. Adam talked about the pre-market moves there. One thing to keep in mind if you are trading in there, whether you trade options or not, using the options market to show you what the market is expecting is really wise, in my opinion. And right now, what the market is telling us through implied volatility is that in GameStop, so you have a stock that's basically trading right around $49 right now. The expected move from now until Friday is $24. So half the stock price to move up or down between now and Friday. And I think when people start doing any type of trading, the first thing you should say is not how much I can make, but how much can I lose? Do you, we all have the stomach. If you buy something and it goes up $24, you're happy as can be. But do you have the stomach if it's going to go down $24? And you can see how fast these moves are happening. So the biggest thing I would say is if you go in and play this stock and it's not one that you normally do, please do it in a very small manner because the movements are happening so very quickly overall. So the other thing, even with AMC, trading about $9.50 right now, that move from now until Friday, you have a implied move of $4.50. Again, these stocks, almost 50% of their price, they're expected to move between now and Friday. That alone should be a letter of caution for anybody interested in that.
Adam, really quickly here, we're still seeing that a lot of the action in the trade for these names is coming from retail investors. For this rally to continue throughout the course of the week, let's say even the month, does it have to hit more of the institutional investor side?
I mean, I think right now, and those are some great statistics that JJ just outlined. I mean, the implied volatility on these stocks is in the hundreds of percents. And the options are trading. That's just a testament to the risk appetite that's present in the market right now. I think from both institutional and retail investors. And I think that's something we're seeing throughout the entire market, from tech stocks to the S&P to meme stocks. There's just risk appetite everywhere. So it's hard to say really how long this can last with these stocks, but I do think that the impact of meme stocks isn't necessarily one that's going to drive the entire market. I think institutional capital is still focusing on the bigger names. And I think in the background, you have this kind of meme stock situation happening. And look, I think with anything that's very volatile like this, you will see institutional players making trades because volatility is opportunity for traders. And there's definitely a lot of opportunity right now.
All right, Adam Kobeissi, we have to leave it there. And JJ Kinahan, thanks to you both so much for hopping on and joining us here discussing what could be next with this meme stock rally. Looks like, at least for now, it's just getting started.